Robert Reffkin joins us, Compass co-founder and CEO, exclusively here at Post 9. So you've been trying to make progress on the profitability front, Robert, in this environment, and that's what you've done this quarter?
Yesterday, we announced that we were free cash flow positive for the second quarter in a row, that our market share grew year over year, and that we had our second highest agent retention quarter in our history as a public company. So really proud of the team and all their work.
Despite what kind of environment is that right now?
So the market was down 20% and we were down 12%. And so we outperformed the market.
Is it because of your exposure to places like New York, which has held up better?
It's because we have nearly 30,000 of the best agents in the country. And we're the number one brokerage by sales volume in the country and it's the major market in the country. What I'd say is happening overall, though, is there's just not enough inventory. We have record low inventories, 4% less than last year. And last year, it was already record low inventory. Prices are at an all-time high, and that's because there's more buyers and sellers. If prices can't be at an all-time high if there aren't more buyers and sellers. And the one silver lining we have is the rate lock issue is reducing over time. So 60% of homeowners have mortgage rates of 4% or below, but it was 72% earlier in the year. So you take that trend out for 2 years, 2 years from now, we could have less than a third of the country locked out from selling their home. That'd be a very good thing.
If mortgage rates were to stay the same?
If mortgage rates are going to stay the same. But if you look at what the estimates are, the Fed will not increase rates further, and the first rate decline will be in late spring. So that's the outlook that we're basing this on.
How much pent-up demand is there? I showed a survey that CNBC just did for people 18 to 34, and more than 80% of them say they do not own a home.
There's a lot of pent-up demand, and we talked about it on this show before. You have the 5 Ds, which is keeping the market moving. Diapers, diplomas, diamonds, divorce, death. Those life events keep the market moving at this pace. It's a must-move market, but all the people that want to move, they're really on pause. And so where the deferred demand is, it's in the people that want to move, not in the people that have to move. And it's building up month over month over month.
Robert, when you in a press release say you continue to identify efficiencies in the business, targeting $850 million in annualized non-GAAP operating expense, what are those efficiencies?
So we're aggressively pursuing vendors, very aggressively trying to bring those vendor costs down. We are bringing offices together to create energy, not to reduce energy. So let's say you have 2 floors and they're both at 20% capacity. Let's make it 1 floor, bring people up so it's 40% capacity to bring more energy in. So again, to bring energy, not to reduce it. We have efficiencies of offshore and outsourcing labor in some of the back office. Those are some of the key areas.
Is that how much more room do you have to go here in terms of pursuing
what we have said to the street is that we are targeting $850 million of OPEX. We're currently at around a $900 million run rate. Okay. And so about 50 million more to go. In the market, it will come back, but our expenses, we're going to hold them at these new levels and make sure that the delta of the market increase to our OPEX, that delta of EBITDA goes to our investors.
What about the pressure on agent commissions and how that's going to affect your company and the entire industry?
There's no evidence of pressure on agent commissions. If you look at the last 2 years, commissions have actually increased because in down markets, buyers and sellers want to work with the best agent. And the best agents command a commission. They independently decide what that commission is with their buyers and sellers. And so there is no evidence that there's going to be pressure in the future.